Hello, this is Jordan. This video is being recorded on the evening of Tuesday, December 20th, 2022. Thank you so much for joining me. In this video, I'm going to briefly discuss gold and silver and specifically their outperformance against the S&P 500. So we just have one chart, and I just want to talk about the immediate outlook and also the long-term outlook for these ratios. At the top there, you can see gold against the S&P. Bottom is silver against the S&P. Both are on log scales. So gold against the stock market, if we start with that, it closed today at a 5.5-month high, closed at 0.48, the ratio, a 0.50. That's really the key level. Because if gold can take, or if the ratio can surpass 0.5, then it's going to be at a new 52-week high. And I don't want to say it has an easy glide path up to the resistance at 0.65, but I mean, obviously, moving from here, where the ratio is holding above the moving averages after several tests, and then breaking above 0.50, I mean, that would signal some real bullish momentum in the ratio. And so in gold relative to the stock market. And so in that ratio, I showed the 200-day moving average, also the 400-day, which is in red. And so the red arrows show points where, if you go back to the beginning of 2016, that was the first time in a while the ratio surpassed the 400-day moving average, and then it fell below it in late 2016. Basically, after that, it wasn't able to get above the moving average and then hold above it until you can see there the end of 2019. So that was where the ratio held above the 400-day moving average successfully. And since then, we haven't seen real significant positive developments for the ratio until until after September and after the summer, because you can see that the two red arrows there, twice the ratio tested and held above the 400-day moving average, and now the 400-day moving average is starting to slope up just a bit. Remember, the slope of moving averages, especially long-term moving averages, is very, very important. So that's very encouraging to see gold, here and now. It's definitely holding above the 400-day. And, the 200-day in blue, that's been a lot more volatile, but we can see for the most part, if in the short term that continues up, the ratio continues up to 0.50, then the ratio should continue to hold above the 200-day, which is rising, albeit, it's rising somewhat sharply. So looks good in the short term. Now, taking a bigger picture view, we can see 0.65, the resistance from the 2016 high, the 2020 high. So that's the next major, the real significant resistance point. So first is 0.50. And if you can clear that, with room for more momentum, then the precious metals market is going to make a significant move to the upside, in nominal terms, because again, if the ratio clears 0.50 there, that's going to imply there's potential for some real strong outperformance, and that's really good for the entire sector, from the top gold all the way down to junior exploration stocks, when gold is outperforming the S&P 500 to that degree. So, I mean, that's something we could potentially look for. I mean, there's obviously, again, there's two different steps here. First is breaking 0.50 in that resistance. And second, when you're breaking above 0.65, that's really, really significant. That kind of break, you're talking about potential for the ratio to outperform strongly for the next couple of years. And so let's go to the bottom and look at silver against the S&P 500. And so silver, as we know, it's been outperforming gold in the last couple months. We look at the, we look at the ratio there. It's kind of been basing since the end of last year. I mean, it did make a new low in September, but, we can kind of call that a double bottom, a big double bottom over the last 14, 15 months or so. But what to me is really interesting is look at what has happened in the last couple months. So we saw the ratio turn up into October, then it pulls back, then it makes a slight higher high, then it comes back and it holds above the 200-day moving average there in blue, which is sloping up. So that's where the last blue arrow is, as you can see. That's when the market just made a the ratio just made a new high, then it came back and was able to hold the 200-day moving average, which is sloping up, and establish that as support. So now we're looking at the ratio, silver against the S&P 500. It closed today at a 9-month high. And look, it's really, really close to a 52-week high. So it's not, it's really inches away or a couple hairs away, that ratio, for making a new 52-week high. Now, in the very short term, is there a lot more upside? Can we see, that ratio make it all the way up to resistance, which is at 0.008? So that's, what is that? That's about 33% higher from where the ratio is now. So that would be a pretty significant move. But that's really the next, that's the next key for the metals against the stock market is, can they take out, as I said, gold and the S&P 0.50, that's the first resistance. Now 0.006 or a little bit more, that's the first resistance. The question is if these ratios can take out that resistance in the short term and have enough short-term momentum to push up to those resistance levels. I don't know, because short term you never know. But here and now, the big picture, it looks really good for precious metals. Because again, you look at these ratios, they're outperforming and they're holding above long-term moving averages. And this is so important for the sector. And, I would love to see these, the next legs higher in these ratios coincide with the S&P breaking below 3,800 and losing that 40-month moving average, which is giving you a signal of a new secular bear. So really exciting developments going on, and probably some more exciting developments to come over the coming months. Precious metal sector, it's starting to warm up a little bit, and in any pullback, it's going to be a good buying opportunity. Love to see this from these ratios. We love to see gold outperforming the S&P, silver outperforming the S&P. That's what you need for a real bull market, and these ratios are telling you that's probably going to come in 2023. All right, thanks so much for tuning in. Leave a comment. Let me know what you think, and I'll talk to you guys again in the next video.